Good evening, everybody. It's Scott Gillum with the Stock and Options Room from ShadowTrader.net. Today we're going to do a review of what happened in 2024 with some thoughts on where we might go in 2025. As you can see on the S&P 500, we've had a starting point at the low for the year around 4,700, all the way up to the high of around 6,100. One impressive move. On the NASDAQ, very similar type of ascension from around 16,250 all the way past that 22,100 level. These are unprecedented moves. As we take a look at a couple of other of the stocks, our Fangman plus T, or the Facebook, Amazon, Apple, Microsoft, Nvidia, Netflix, Alphabet, Tesla, Microsoft, you can also see they've had one impressive move from a composite of around 1,900 to around 3,300. That is a huge move. If we strip those 8 stocks out of the S&P 500, so we've got 492 left, it's not as impressive, folks. The Fangman stocks have pulled this market to the levels that we see as of the end of the week. For those 492, we started around a 2,600 level, and if you use the number that we ended at, we're about 2,800. All right, enough for the charts. Let's do a review of what we've got. 2024 in review and some 2025 projections. Now, my name is Scott Gillum. I'm a moderator in the Stock and Options Room, and you can get all of this information if you're subscribing to the ShadowTrader.net site for these two rooms. So right there is your website that you can use. Again, let me remind everybody that all rights are reserved and copyrighted for 2024. The content in the presentation is copyrighted by myself and the sources that I've used. Should not be considered as any sort of recommendation to buy or sell a security. All information here is for educational purposes only. Here's a composite look at what we did in 24. The Dow up 14%. The S&P up 25.9%. The NASDAQ, a whopping 33.6%. The Russell, well, not as good, but still up 11.5%. Volatility moved from a 13 all the way up to around a 16, or about 20% move for the year. And Bitcoin, this one was the biggest mover of them all. Under 45,000, ending so far as of Friday at 94,000. Folks, we've gone as high as $107,000. Although that's impressive, it's 110% return so far in 2024. All right, so what happened in 24? Our S&P performance, as I said, was up 25.9%. NDX up 33.6%. Here's what the Fangman were, up 65.5% for the year. And the rest of the S&P, a meager 1% return. Some factors that brought that performance. Our earnings for the S&P 500 in 24 should reach about $233 per share. That is a huge move from what they were from 2023. This 233 at the current Friday close of 59.71 gives us a price earnings yield of about 25.5. So now the earnings gain from 24 was nearly 9.3%, and that gain was seen because of a few factors that I highlight here. Inflation dropped from 5% down to around 2.5%. Our employment growth accelerated. We had wage increases averaging over 6% over this past year. Housing valuations continue to rise, giving people that expanded wealth feeling, and thus far putting more of their money to work in the market. Consumer spending, boy, it's continued its robust trending throughout the year and doesn't look like it's abating. And then on the bond market, yields have been compressing to the short duration aspect of the yield curve and allowing companies to refinance without a lot of pain. And here's a few of the big things that happened in 24. AI mania. We know that bubble is still going on. There's your Bitcoin. Boeing had its challenges, one of the big movers on the Dow. CrowdStrike had a big tech outage this past year. We've got deficit concerns. We've got earnings volatility going through the roof and coming back down. That's basically tied to this Japan carry trade, which blew up in August. The aspect of GLP-1, or those weight loss drugs on the market for equities, had a big impact this year. All sorts of Middle East crises going on, still going on. We've got the red sweep in our election, thus giving us a Trump 2.0 coming up next year. So that'll be a 2025 situation. And we've got a lot of things other than that that were not immaterial, but were kind of launching points for swings higher and swings lower. So let's take a look at 2025. The S&P earnings for 25 currently projected around $271. Remember, 24 is about 233. Projections for about 16% higher here at 271. Well, at that 271 number, that puts our price earnings ratio on the closing price from Friday at a 22 price to earnings ratio, a drop of about 3 points. Not that it should be used as any sort of gauge, but that would give me, if I take our current price to earnings ratio at 25.60, multiply it by the 271 earnings per share, would give me a target price on the S&P at around 69.40. I think that's a little too optimistic. Let's take a look at some of the institutional estimates to bring it back to reality. From Goldman Sachs, they broke down the earnings growth from a bottom-up type of situation, and here's the top 5 sectors. Technology, looking for that, an earnings growth of around 21%. We had 21 this past year. Utilities, though a big gain in 24 because of AI, that growth should mitigate down to around a 3%. Communications, coming down a bit from 20 down to 14. Discretionary, consumer seems to be kind of pulling in their strings a bit, so we go from 13% to a modest 11% return. And financials, though projected to be only a 6% growth next year, this one could be the sleeper of those sectors. All in all, the S&P to gain about 13% from last year to this year on a bottoms-up earnings growth potential. So taking all those numbers and putting them into some context, if we take the closing price of today, 59.71, or Friday, and we take that 271 of expected earnings, there's your 16% growth year over year, and we take that 22 price to earnings ratio, that brings us to a S&P number of around 60.41. Well, that's not too far away from where we are currently, and that is just below the all-time high. Now, using the 25 price to earnings ratio, where we currently sit, there's your 67.81 number, and a more realistic Goldman Sachs price to earnings ratio at 22.50, 61.03. So there's your guidelines, I believe, for next year. On the low side, just about where we close. On the high side, with some exuberance, up there about another 10% or 8% from where we are now. I've also given you statistics for the breakdown, quarter by quarter. These are listed from Goldman Sachs. And then taking those quarters, just multiplying by 4, we get numbers that are similar to what the year projections are, but I give them to you quarter by quarter. Now, to obtain a copy of this presentation, if you're a current subscriber, your access is going to be in the Files section of the Trading Room. If you're not yet a subscriber, please subscribe. Go to www.ShadowTrader.net and sign up. All right? So there you have it. 2024 on the S&P cash market. Definitely the trend line still bullish. Pitfalls, there's the carry trade from August, the Japan carry trade breaking in August. The flush that we had in April was CrowdStrike disrupting the internet. So we've had these two very unseen events happen that caused the market to take a little bit of a hiatus. But if you note, this 50 simple moving average has held and held very well for anybody that had the wherewithal or the foresight to say, my buying opportunity is now. Then taking a look at the 21 EMA, same thing can be said on a shorter term time frame. We had the flush, buying opportunity, the flush, buying opportunity, the flush, buying opportunity. So folks, going into 2025, watch these moving averages, the 50, the 21, and even the 8 if you're doing very short-term trading, as your buying opportunity levels to be watchful of. Thank you all. Have a great day. Take care. Bye-bye. Hi there. This is Scott Gellar from the Stock and Options Room of Live Trading Suite. If you enjoyed this video, please hit the like and subscribe buttons down below. And if you'd like to trade live with me in real time, click again that link in the description below. Good trading to you all, and I'll see you in the room.